Okay, I wanted to quickly record this idea, not an idea, rather a quick Elliott Wave analysis. Some of the guys are trading the Bitcoin on the M5 and M1 chart using the setup one. Let me change the feed. So what we're doing here is we look for the setup one, which is basically looks something like this. We wait for the peak of AO. And cross of zero line, we wait for the sleeping data and we trade over here. So I thought I'll do quick Elliott Wave analysis on this, and I'll do it with bar replay. So the first time he saw this setup, it happened over here. At that time, it would be a wave 3 for you. So you would be going into a wave 5 down there, right? So let's go forward. This is where the first trade was. It's a beautiful trade. Well done on King Aslan for taking this. And then after that, what you do is you wait for the AO to come back to the zero line. By the way, I forgot to mention is that when you thought it was a 3, when the AO crosses below this, the peak of it, when it creates a new peak, then this becomes your new wave 3. And because this is now your 3, what you thought was a 3 became a wave 1. So now I can mark that as 1, this is 2, this is 3, and now the structure is building. So now based on this, I can predict if there is going to be a wave 4, I will wait for it. So as we are waiting, let me make the chart goes forward, continues down. So now what I see, if I explain this chart further, inside the 3, I can now see some sort of a 1, 2 here, a 3 down, a 4 up, and a 5 down. I will mark this as well. So let me first actually mark the smaller wave for you based on this. So I can say this is one, some kind of a 1, 2. This is 3 down, and this break over here, this is what I call the PC break. And you will see why, because within the pullback, when there's a wave 4 on a lower time frame, you'll see this break of the lower, the previous lows. So it's a fake out break, and that's your 4. And this became your 5 because there's a divergence on AO, right? So now as we wait further, we're going to be waiting for a wave 4. And inside the wave 4, we'll see ABC again, but it's ABC of this current time frame. So here we go. We have another setup forming on this. Comes down, but it becomes a B trap because this is A, this is B, and you would get in here but get out quickly. Then it goes sideways, creates that same kind of ABC pattern, and now we're ready. So once you get trapped on this, the next trade becomes very powerful and important to take. It's completed. So as you can see over here, when it's done A, B, and C, there's a strong rejection. And this is the rule that 8 out of 10 times, wave 4 will come into the region of the wave 4 of the previous 3. So if this was a 3 and we have identified the wave 4, this current wave 4, about 8 out of 10 times will actually come into this region. And look what it's done. It's bounced against the previous high of the wave 4. And after that, bouncing there, it has introduced, or it brought in more sellers. There we go. It goes down. And this will become your beautiful wave 5 trade. A fantastic trade, which you could have entered here, then add on there, and add on further down there. And now as it's gone further down, looks like it's turning into a new wave 3 because it went really, really strongly down. So that's the story of that. Now I'm going to see what happens further on. So it pulled all the way back up and creating another setup. So here, what you'd see is most probably around this time when market does a 3 and 4 and a 5, there's usually a B trap. This was a B trap, so you'll get in here and quickly get out because you knew what was going on. And it could do another ABC. And usually at the end, towards the end of a wave, like a 3, 4, 5 is completed, there will be another push down, which usually ends around this level. If it breaks the low of this, then a new sequence begins. But on this occasion, provided you have a really beautiful trade that you could already have targeted this level with, and you went short here and you targeted that, there we go. So that's the wave completed on this, and now I'm going to mark this wave for you. Let's get rid of these two things so the chart is clearer. So the overall wave is now 1, 2, 3, 4, and 5. So I'm going to measure this, count this, mark this. Wave 1, 2, 3, and we have also measured the or marked the 1, 2, 3, 4, 5 inside the 3. Now we have the 4 up and the 5 down. Inside the wave 4, we can also mark what we think is an A, a B, and a C. ABC usually works like that. And the reason we call these trades as B trap is because within the B, there's always ABC, and C usually has this habit of breaking a box, like a fake out, creating a fake out, which it did over here. So wave 4 has ABCs most of the time, and it would fake out over here. So that's your PC, the principal C, where C pokes out. This is principal B, where the wave B pokes out, and even within wave B, there's the C that pokes out, so ABC. And then if you look at this trade, this is ABC. If you go to the 5-minute chart, that same principle happened. So you have a 3 down, 4 up. Inside the 4, you have AB, and the C pokes out. This poking out of C is what I call the PC pattern, and it's very, very powerful. If you identify a 3 and a 4, and you have this PC pattern, or even inside a strong moving 3, for example, when it was happening on the M1 chart, when you see a PC here, and as soon as it breaks out, fakes out, and then closes inside, I would go short below this low. Usually, when you have a pin bar or a doji type of candle like this, which opens and closes here, and then the tail goes up, pokes out, and fakes out, you can go short here and target what we call the wave 5. So this was a beautiful trade sequence on this. And usually towards the end of when you have seen a wave 5, there will be another push down, and it will end around here. So we usually trade this. We end up taking this. When it turns into a 3, we wait for a 4. We usually pay a little rent here and then cash the next 5, and then another scalp towards the end as well. So these are the 3 trades in sequence that we can take. You can apply this method to any time frame, M1, M15, H1. All you need is a trending market. So hit the like button if you like this idea. This is a very, very powerful method. I always use it every day, and I've been doing it for 10 years now.